Okay, everybody is wondering what is going on with this market. Are we going to have a QE, not a QE? Market going to give us a 20, 30% correction? Well, I'm going to try to clear that up for you. First, yes, the market's going to give us definitely a 20 or 30% correction. But the market will tell us when. Right now, what's going on is we're getting a lot of nonsense coming in from the chairwoman who's saying that we're going to raise rates. We were ready to drop, as you can see if you look at this chart right here. And this chart, let's go back and look at this one. This was the stock market drop we had going back in August of last year, right here. Okay, and this is when I told people to sell it short. Told my gang members to sell short. Started out here. We had what we call a series of lower highs, and then she finally broke, and we were short. Okay, because it turned red. Okay, on our PT2. Then we had a rally where she turned green again, going back up, and then we started the same thing again. We had lower highs, lower highs, lower highs, and then one more lower high, and then she dropped in January. This was after she made the announcement of the 25-point increase in rates, and she dropped. Both these, okay, this was driven in July and August, and that's when you have very little news coming in. And so when we got some bad news from China, it was very easy to drop this market. There wasn't much to hold it up. Now, this, of course, was due to the rate hike. Now she's saying she's going to do another rate hike. Now, we were just ready to drop right here. This is going to be our third drop starting right here. This was our third drop ready to go. And she was able to stop that third drop. See, here's 1, 2, 3, by creating a false narrative that she's going to raise rates coming in June. And so we ended up with this rally here, going up, losing our lower highs like here. And now she's reached now she's not quite to the high where we were. We should be at 213. She's not quite there, okay? But she's getting very close to it, okay? So what she did was this idea that she keeps saying the labor market is strong, okay, which is not true. The labor market is really weak. And we all know that. That doesn't make any sense at all to say the labor market is strong when the labor market couldn't be any weaker. When you look at the labor market and you see what's going on, it's just weak as hell. First of all, we've got so many discouraged workers, got 5 million discouraged workers. They're just not even looking for work anymore because things are so bad. And then we have about another 7 million people who would like to get full-time jobs and they can't find them. And we just got a real problem, with the labor market. We have also, if you look, we have too many part-time people. We got a record number of part-time people. We got the record number of people with multiple jobs, over 100 million. We have the lowest participation rate since 1955. We have the lowest wages in 20 years. 76% of our workforce, of the 141 million Americans, are living from paycheck to paycheck, which is caused by our lowest home ownership since 1967. We have 90% of our workforce making less than $55,000 a year, and of the 90%, 51% are making less than $29,000 a year. When Obama came in office, 1 in 5 jobs were high-paying factory jobs. Now it's 1 in 12. So, and we got 6 times more bartenders and waiters as good-paying manufacturing jobs. So there is nothing good here at all. So how is she able to keep this market from collapsing with all these bad numbers? How could she keep it up here? By the fake narrative, she's going to raise rates. And when you get that fake narrative, what happens is people come in from Europe, they dump their euros, and they buy dollars. And when you buy dollars, and anytime people see that, hey, interest rates are going to go up, that's synonymous with a great economy. Dollar up, synonymous with a great economy. So she went to Europe to get all their investors, because U.S. investors pulled out about $55 billion in this area right here. They pulled it out. So finally, she has been saying this so long that now she has decided to have everybody come out and say the same thing. The labor market is strong, and it's just not strong. And I just gave you some of the facts why it's not strong. So what's going to happen? Well, we got our auto sales, which was interesting. We had some terrible numbers. I mean, headlines the other day. We had the headline, retail sales are up. Consumer spending posts the biggest gain in more than 6 years. Now, that didn't make any sense to me, because going back and look at April, retail sales were down terribly, led by a terrible auto market. So auto sales were really bad. Back in April, we were 17.8 million. After they came down in March of 16.8 million. So what they did is they dropped what you need to qualify your credit. You could have a credit score, FICO score below 500. You don't need any down payment. As long as you could fog up the rearview mirror, you're fine to go. And they're trying to create. They're doing everything they can to hold this car market up, because it's 40% of our overall manufacturing market. There's the problem. Our manufacturing market, our industrial production hasn't been this weak in 10 years. So she knows she's got a real bad situation. So she's just trying to keep this market up with the narrative that, hey, everything's great. We got a strong labor market. And it's just not true. We don't have a strong labor market. So she's trying to eliminate this this sell-off. So she's going to come in with QE. There's no question. She's going to have to come in here with QE, okay? And it'll be QE4. Now, everybody's saying no. That's not true. It's going to be, again, most definitely this QE4 is going to start right in this area right here, okay? I mean, there's no choice, because let me tell you why. Every time you rally the market and you don't have earnings to rally from, or top line sales revenues, as long as you don't have if you don't have gains in sales or revenues, then you got to have a real big line of BS. And her big line is, hey, we're raising rates. The Europeans are running around looking for yields because they have to even pay to put their money in the bank, got to pay the bankers. They're really hurting. So they're coming over here and buying our stocks, believing that an interest rate hike and the dollar going up is synonymous with a good economy. So she's been able to convince everybody, but not the Americans, because we pulled out $55 billion while the Europeans came in. So she's going to have to do her QE, and we expect she will do it. Now, is she going to do the QE before it drops to hold it up? That's the question, because she can't hold the market up here. Because to push this market here, just use this one here, to push the S&P up, to try to drive this S&P, let me bring it back here. To drive this S&P, there's the high right there for the year, 213. To drive that above that 213, she can't just keep saying, and everybody just can't keep lying and saying, hey, labor market is good. That's why the economy is doing better. To drive it up, that's all they've been saying. That's their narrative, and it's just not true. You got to have something holding this up. See, this couldn't hold. This couldn't hold. They broke. So something's got to hold it. So she's going this way with no increased earnings, no increased revenues, a weak labor market. And so if she can create another story, maybe what they do is rig the job numbers on Friday. Okay. Now that's going to be interesting, because if it's a weak job market, then then that's what people are looking for. The market will go up, because they'll say, oh, if it's a weak job market, she's really going to come in with QE. If it's a strong job market, then the market will probably sell off. But in any event, we always trust this guy right here. See this red line? As long as this red line's going up through the yellow, and as long as it's green, we just buy. When it comes back down through the yellow and it's red, we sell short. It's so easy, like right here. When it came down through, we sold short, we made all this money. When it came down through here, same thing. As long as it's below this yellow line, we made all this money. We're not going to get into the debate, okay, with them. All we want to know is money in, money out. That's what makes it so easy. So I believe that I think it's going to drop first, probably about 5%. I think the market is not going to go, she's going to try to move it up, and that's not going to work. And I think what's going to happen is the market's going to pull back about 5%, okay? Probably about this area right here, this area right in here, about 5%. Then they'll do the QE. That's what I think is going to happen. There's no choice. She's got to do QE, okay? It's just a matter of when. So I don't know how many stories she can have to move this up, but it's not going to work, okay? So that's really it. So what we're looking for right now is this. We've got some great opportunities. Macy's, for example, if you look at Macy's, all right, we had a nice sell-off in Macy's right here. When it turned from green to red, this crossed over, and we were able to short this all the way down. Now, it's crossed back over here, so we're not going to short it anymore. We're waiting for it to turn green. I think the retail stocks are going to go up next. They usually the institutions buy all the retail stocks when nobody wants them, okay? Because they're usually the performer. If you look over in a year's time, you can see how much this was beaten down in a year. By the way, this was another nice short for us right here. When it turned from green to red, and we had the crossover, this was another perfect short for us. This was a good long. When it turned from red to green, we caught it going up the other way. I know it's so simplistic, isn't it? Just red, green. That's it. Simple. Because it's following the institutional money. I also think JCPenney is going to be a great opportunity. Okay. Same thing. We had this big sell-off here, and now we're just waiting crossover, waiting for this to turn green. Okay. Once it turns green, then we buy. I think JCPenney, Macy's going to be a great opportunity on the way up. If the dollar gets strong, now look at this. When the dollar gets strong, if the dollar keeps going up, now remember, we made all this here. We caught this whole rally. When it turned from red to green on GDX, went up over 100%. Now it's just turning red, and we're now shorting it. We're now going the other way. If the dollar keeps going up, this should stay red and keep coming down. All this is following is momentum of the money in and the momentum of the money out. So my take is, again, the market is going to have a 10% pullback. Then there's going to be QE, or she's going to rally the market without a pullback and try to sustain it and then bring in QE. So either way, we're going to win because we have a chart that tells us when money's coming out, when money's going in. So why don't you join the gang, and you can follow us, especially on this money-making opportunity, Macy's. When that turns green again, starts heading up, that should be really good. And JCPenney, I think these two will be really good. And I also think gold is going to come back down if the dollar's strong. Okay, gold will come back down. The reason for this big rally here, because all the institutions were dumping their money, and everybody was just knows the economy's bad, and everybody was heading for gold. And now they're trying to tell everybody, well, no, the economy isn't in bad shape. You don't need gold, really. So if you get a pullback here, we're short now. If it goes back further down to this red line here, you could make some money. So that's about it, gang. So, and non-gang members. So there's my take on the market. Again, we're going to get either a rally where it's going to break out through a high. She's going to push it up with some noise and some nonsense. It won't sustain itself. It'll come back down, and then she's going to use QE. Or she's not going to do anything. It's going to fail, come down, and then she's going to use QE. So either way, there's going to be QE. So please don't miss this market with QE. Because, boy, the last time they front-loaded this market with QE went up over 100%. See you on the charts.